Hi, good morning, good evening, wherever you are. Welcome back to the Dummy Investor channel. This is a channel for retail investors. I've been a reasonably long-term do-it-yourself retail investor myself, and I use this platform to share my perspectives and opinions about where we are as far as investing in the stock or the equity markets go. And hopefully, the idea is that fellow retail investors can derive something useful out of it. So, on today's episode, I thought we can just cover how the stock market closed today on the 4th of December. Today is a Friday, of course. It was a curtailed week because Monday was off and we had 4 days of trading. But the big headline event, of course, was the Reserve Bank of India MPC meeting today and their announcement that they're going to keep the interest rates at the same levels and adopt or continue adopting an accommodative stance as far as liquidity in the system goes. Now, I'm going to cover something about what does it imply for retail investors as far as interest rates go in a separate video. But just on today's video, of course, this RBI announcement was on expected lines. Nobody was really expecting a one more round of rate cut, purely because the inflation situation right now in India is somewhat on the edge. We are hitting 6.8% on the CPI inflation, and clearly RBI is very closely monitoring it. Doesn't want it to go out of hand, and not really anyone was expecting a further rate cut. However, keeping the interest rates at the current levels of 4% repo rate obviously implies that interest rates are not going up. And what that means is that there will continue to be, at least within the domestic monetary system, an abundance of liquidity, if I can put it that way, and that has implications for the stock market as well. And not surprisingly, the market ended on a very strong positive note today, and not just today, for the entire week, the market was up. And we're going to spend through looking at some of the underlying components of the Nifty 50, the Nifty Midcap Index, and the Small Cap Index to just see how some of the underlying stocks have behaved in the last 6 odd months, and really then try and derive some insights or conclusion in terms of whether there is at the present point of time any value in this market for prudent long-term value investors. Now, I do want to differentiate or call out one fact right before we proceed, that this is not for traders. This is not a channel for traders. So this is something which is for long-term do-it-yourself investors, people who want to put their money and see it grow and appreciate over a long period of time and hopefully beat alternate asset classes, assuming they invest wisely, right? So I just want to call out that disclaimer because clearly these are heady times. There's a ton of liquidity coming within the system as well as from outside, from foreign investors, and it's very easy to get caught up in this exuberance and enthusiasm. And clearly, the numbers are going to reflect that. So let's just go right in. Um, Now, this is how the market ended today. It was up almost 1%, and here you see on the chart, um, the underlying 50 companies that constitute the Nifty 50. Mostly, it was largely a sea of green. I mean, the big uh, downer, if I can put it that way, was Reliance, which is down almost 0.8%. And two HDFCs, HDFC Life and HDFC, which were also marginally down, but clearly there was no trend in terms of a sector because uh, the banks did surprisingly well. Almost all the banks were up. ICICI Bank 4%, Axis Bank almost 2%, and even HDFC Bank, given that it has been taking a beating in the last 1 week, was almost up 0.6%, right? And generally, everybody seems to be going up, and very few stocks actually came down today. And this trend is sort of continuing as we sort of move to the weekly chart for the Nifty 50. Now, this is the price change for the Nifty 50 in this current week. And as you see, the big drag, if I can put it that way, is on the Nifty 50 was HDFC Bank, down almost 4%. Partly it had to do with the RBI instruction on HDFC Bank facing some system issues, and that sort of muted the sentiment a bit. But all the HDFC companies were down this week. What went up was, of course, surprisingly, public sector holdings on cyclical plays. So GAIL was up 16% this week. ONGC up almost 15%. Hindalco up again. Metals, oil and gas, these seem to do well, and clearly it seems as if even Coal India was up 6%, Grasim up 6%. It seems as if now we are reaching a situation where obviously the Nifty 50 has run up a lot, and people are now trying to find value in stocks which are relatively inexpensive. And one of the sectors, or a basket of sectors, which is clearly optically undervalued, are public sector entities, and those focused on cyclical sectors, metals, mining, oil and gas, public sector banks, and so on and so forth. So clearly, that's where the money has gone this week, and the numbers seem to indicate that. ICICI Bank has been on a strong up move, almost 6% up this week, and the tech guys are sort of also doing pretty well. And obviously, um, like I mentioned, the only exception to this whole story has been Bajaj Finance to an extent, and then the HDFC uh, entities. And it's an interesting thing because obviously this is in line with how the market has been operating, because all the underlying companies are operating, but this sentiment has now started also flowing into the mid cap and the small cap space, and we'll look at that. Um, but before even proceeding on that, this is the chart for the Nifty 50 for the last 6 months, and what you see is obviously it's up 30% on absolute terms, right? So this is not compounded numbers, these are absolute numbers, and the numbers speak for themselves, right? You see a sea of green again, led by IndusInd Bank up 120%, so it's almost doubled, more than doubled. Bajaj Finance, Tata Steel, surprisingly, all the steel companies, JSW Steel. Again, we see a trend of cyclicals, Hindalco also going up. And then, of course, the tech guys and the financial services, right? So, ICICI Bank up 44%, Kotak Bank up 38%, HDFC Bank up 38%. Auto stocks have also done well. Maruti, Hero Motors, Bajaj, all these companies have done well. What has not done well are actually very few. Bharti Airtel is down 13%, and I would probably put that as the only company which has sort of bucked the trend in the reverse way. The FMCG guys have been sort of flat. Unilever up only 3%, Nestle up, close to 3.5%, Britannia up 5.5%. And so growth story is clearly in technology, banks, financial services, and to a large extent also in metals, minings, and so on and so forth. Now, this is just a past 6-month trend. It may not repeat going forward because clearly all these stocks have run up a lot. And that's why I said maybe the money now is looking at other avenues. And potentially those avenues could be mid cap and small cap companies because the Nifty 50 is run up a lot, or cyclicals, renewable cyclicals, I would put it that way. Metals, commodity companies, oil and gas, metals, also some of the public sector enterprises, you know, NTPC, ONGC, so on and so forth. So that's sort of the lay of the land in terms of how the Nifty 50 has behaved today in the last 1 week and in the last 6 months. And obviously, like I said, increasingly you'll start hearing voices on the media, on the news that the money is now going to chase, mid cap and small cap companies. So just let us just look at how these guys are behaving. Now, this is the Nifty mid cap in the last 6 months. I mean, I didn't take a daily or a weekly average. I'm just going to focus on the last 6 months for the mid cap and the small cap index. And it's again a sea of green, and it begs the question, where is value in this? Where is value in this market? The mid cap index, Adani up 200%, Chola Finance 160%, Ashok Leyland has almost doubled, Jindal Steel almost doubled, Apollo Tires up 83%, Apollo Hospitals up 80%, so on and so forth. So even cyclical plays like Tata Power, Jindal Steel, uh, Shriram Transport Finance, these guys are up, and so are the tech guys in terms of Mindtree. Um, so it's like a sea of green everywhere. And the only stocks which have sort of not really done well are uh, Torrent Power, which is Torrent Z Learning, and to a lesser extent, I would say Castrol, Exide, and Bata. So looks like the trend is the telecom guys have had the run because Idea is down. I mean, Idea was up only marginally as compared to others. It's still up 13% for the 6 months, which probably means if the trend continues, it'll end up doing more than 20% for the year, which is a healthy number. But just for the 6 months, it's up 13% in absolute terms. And if you see Airtel here, it's been down by 13%. So clearly, telecom had the run before this 6 months, and that's where the money is not going, except the exception of Reliance, and that was because of so much of investments they were able to get, garner globally, that they sort of had a positive sentiment going for the company. But apart from that, really, there's nothing much to say. I mean, the numbers are quite revealing. Everything is up last 6 months. If we move on to the small cap 100 index, again, everything is up. Lotus Labs, it's the poster boy company right now. Everybody seems to be talking about it. Up to 50%. Uh, Irrespective of valuations, irrespective of fundamentals, companies are up. Apple 160%. Um, it's across the board. I mean, really, the only exception is um, GMM Pfaudler, Godfrey Phillips, um, Ircon, and HEG. I mean, those are the companies that I would say are have had a degrowth, and then Omax, which is down 60%. I mean, I don't know much about this company, so I don't know why it is down 60%. But that's been the story, and again, it begs the question, where is value in this market? Especially, like I mentioned, I'm going to tie it back to what the RBI has announced today, where what they're saying is they're going to keep an accommodative stance. They've kept the interest rates the same. while acknowledging that inflation is, getting a bit uncomfortable now at 6.8%. Clearly, what that means is, in today's times, if you invest your money in fixed instruments, fixed debt instruments, you're actually losing money. Your money is losing value unless those instruments are long-term debt instruments. You'll be losing money on savings account, on fixed deposits, and so on and so forth. So clearly, this is something which I had alluded to earlier. It's becoming difficult for retail investors to figure out what to do with their surplus money. There is increasingly, it's reaching a stage where you have to participate in this market, but then at the same time, I would say, uh, we should be cautious about how aggressively we want to put our money in this market because it's already run up a lot. And people say there will be a phase of consolidation in the market now because clearly nobody sees this going perpetually forward. And if you're a retail investor who's sort of not had a chance to put money in the last 6 months in the market, and you've seen all these companies go up, um, this may not be the best time to invest in some of these companies. And you should definitely try and avoid this fear of missing out syndrome as much as possible. I think just bide your time, and that's what I'm trying to do. Bide your time, invest. I'm not saying don't invest, but invest very selectively in stocks instead of just going full on board because you feel you need to participate in this rally and mainly because you haven't had a chance to do it. For those who've already invested, who invested money, say from uh, March, April to June timeframe, obviously you must be sitting on some good gains. And the question then is whatever stocks you bought into, whether from a long-term standpoint, you would still be comfortable holding those companies, or was it more of a tactical play uh, just because everything was down and everything was attractive at that point in time? And if it was a tactical play, which and you don't have any intention of holding on to the stocks long term, it probably makes sense to start, cashing out while it's still high. If these are companies which you want to hold on to long term, then at least what my view is that you should still hold on to them irrespective of what the market does because you're from a long term retail investment standpoint, you're buying into good businesses. You're not really trying to time the market or cash into tactical opportunities. Yes, if the market corrects from here and if valuations again come in the value zone, which seem attractive, uh, at least I'll be putting in some money. I'm still making some strategic investments. I did invest some amount this month after a gap of almost 6 months into specific companies. Did I time it right? Did I get the best price possible? Probably no. But my intention is to think beyond and look at least 5 years, if not more. And I feel I've bought some of those companies at I would say not really expensive valuations, but yeah, maybe somewhat on the higher side as compared to their historical, multiples. So that was just in a nutshell of what I had to cover in this episode. Of course, like I mentioned, I'm going to put out another video just on this whole interest rate situation and how it might, be revealing for some people who sort of, especially for debt investors or fixed deposit people or people who put their money in savings account and really there the picture is or the story is that you're actually losing money if you put your money in some of those debt instruments right now. So I hope you like this video, found something useful in it, and please do subscribe to the channel, please like the video, and thank you for your time and have a good day.